Good evening. This is the post-market recap by AGI Era. Today is Friday, January 2nd, 2026, and it is shortly after 4:30 p.m. Eastern Time. The closing bell has rung, and we have a lot to unpack from today's session. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a market grappling with indecision to start the new year. We saw a clear divergence between the major indices, signaling a complex environment for investors. The S&P 500 finished the day up 0.19 cent, settling at 6,858.47. Technically, the index managed to hold its ground, finishing the day above the 6,850 level after dipping as low as 6,824. It remains within striking distance of the 6,900 resistance level, but the mixed signals today suggest a battle is ahead. The Nasdaq 100 showed notable weakness, closing 0.17% lower at 25,200 seen. The Dow Jones Industrial Average finished up by 319.10 points, or 0.66%. Crucially, trading volume today was healthy, with nearly 2 billion shares traded for the S&P 500. This implies that despite the mixed close, there was significant participation, suggesting institutional forces are actively positioning for the year ahead. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, is trading at 14.95. Despite the churn and the weakness in big tech, the VIX remains relatively subdued, suggesting this is a controlled rotation rather than outright panic. We are seeing a clear divergence in sector performance. Money flowed noticeably into defensive sectors like utilities XLU, which gained over 1.1%, while the growth-oriented technology X sector was up a more modest 0.23%. This rotation indicates that Wall Street is positioning for a more cautious environment, favoring safety and dividends over high-growth names to start the year. The macro engine room, the primary driver of today's moves, can be traced back to the currency markets. The 10-year Treasury Yield settled at 4.41%, holding steady on the day. The main story was the U.S. dollar index, which pushed higher to 98.116. This move is significant because a stronger dollar creates a headwind for S&P 500 companies with large international sales, as their foreign earnings translate back into fewer dollars. This could be a key theme to watch in the upcoming earnings season. Meanwhile, crude oil is trading around 57.32 cents, down slightly as the market digests today's manufacturing PMI data, which, while meeting expectations, did not signal a major surge in economic demand. The AI and Tech Monitor. Turning to the leaders of this market, artificial intelligence and big tech, it was a broadly negative day for the megacaps. NVIDIA bucked the trend, finishing the day up 1.26% at $188.85. However, Microsoft closed down 2.21 cents. Apple was down 0.31%. Amazon fell 1.87%. Meta dropped 1.47%. And Tesla saw significant selling pressure, finishing down 2.59%. The weakness in this group is notable because it wasn't tied to any specific negative catalyst. This appears to be macro-driven profit-taking, as investors rotate out of last year's winners and into more defensive sectors in response to the stronger dollar and an uncertain economic outlook. After hours and look ahead. Looking at the after-hours tape right now, shares of Estée Lauder EL are moving higher, up about 3% in post-market trading. This comes after a day of broad strength in consumer staples and defensive names, suggesting the trend may be continuing after the bell. As we pivot to next week, the calendar brings us fresh inflation data. Investors should specifically watch the Consumer Price Index (CPI) report for clues on the Federal Reserve's next move. This wraps up a volatile first week of 2026. The key takeaway for your weekend strategy is the clear divergence between the Dow and the Nasdaq, and the rotation from growth into value and defensive sectors. The market is sending a signal that caution is warranted, and the strength of the U.S. dollar is now a critical factor for profitability. That is your comprehensive closing update. We will see you on Monday for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed. Always conduct your own due diligence.